Dear clients, welcome to PhillipCapital's Weekly Market Watch. My name is Roy, and I will be sharing with you on Global Logistic Properties, GLP. I will start off with GLP's first quarter 2014 financial result and operating summary. Then we will talk about GLP's investment merits and risks. In the end, we reach our conclusion, a neutral call and a 2014 target price of Singapore dollar 2.8. GLP's first quarter revenue reported $642 million, down 19.6% year-on-year due to the previous monetization of Japan asset into the J-REIT. Adjusted for the effects of monetization and some one-off item, the Japan revenue is still down about 17% year-on-year on weakening Japanese yen. China revenue has recorded a very strong growth of 40% year-on-year. Profit after tax and minority interest reported $204 million, which is up 33% year-on-year, mainly on higher revaluation recognized on the investment properties. Excluding the revaluation, profit after tax and minority interest is down 39.6% due to the Japan asset monetization. GLP's overall property portfolio has been expanding very fast, reaching 15.2 million square meter gross floor area in first quarter 2014. In China, GLP kickstart 0.73 million square meter development start, up 56% year-on-year, ahead of the whole year target of 2.5 million. Project completion recorded 0.32 million square meter gross floor area, trailing our expectation for a second consecutive quarter. The management explanation is that some logistic properties are redesigned into multiple floor ones, therefore take longer time to complete. New lease registered the weakest pace since listed. The management saw it took the customers a little bit longer to make decisions. Next, we will talk about the investment merits that we see in GLP. GLP has an established leadership in all the three markets it operates in: China, Japan, and Brazil. It also has very strong business fundamentals. GLP has ample cash on hand and a net gearing ratio as low as only 9.2%, which allows the possibility for profitable opportunistic acquisitions. Despite the slowdown, China, as the world's second largest economy, is still expanding at a rate above 7%, higher than all the other major economies. The shorter development period for warehouse gives GLP flexibility to quickly adjust development pipelines according to demand, as compared to other tranches of property sector. GLP has low need for debt borrowing. Future project financing will be facilitated by Japan asset monetization into J-REIT, which also entitles GLP growing and recurring asset management fees. Last but not least, we are also observing some nascent sign of yield compression in Japan, which would potentially translate to higher property valuation in Japan. The key risks in GLP include, firstly, a higher exposure in China economy, which is experiencing a slowdown. GLP has been expanding rapidly in China, and to date it has presence across 37 major cities. Therefore, the performance of GLP is inevitably highly correlated to the nation's consumption trend, which is unlikely to stay intact under the macro picture of slowdown. We do not rule out the possibility of the management scaling back from financial year 2014 target project start. Secondly, possible further weakening Japanese yen could weigh on Japan asset valuation. The weakness of Japanese yen has had significant impact on our valuation on GLP. Although Japanese government's aggressive loosening is aiming for a better outlook for the nation's demand, the most immediate impact on GLP is the decreased Japanese portfolio value through the sharply weakened yen. We maintain our neutral rating on GLP to reflect its increased near-term uncertainties from China. Financial year 2014 target price is adjusted downward to Singapore dollar 2.8. Despite the near-term uncertainties, we stay positive on GLP's long-term growth prospect for its market leadership position and the strong business fundamentals. We consider Singapore dollar 2.6 to 2.65 range as a good entry price for long-term investment. That's all what we have for you today. Do stay tuned to next week's video, as we will bring you more stock updates. Thank you.